There have been some mixed signs, of course. We've been following the Federal Reserve's announcement today, but there are other key economic indicators which might give us clues as to where things are heading for the rest of the year. We are joined now by national correspondent Kathy Tubman. And Kathy, you've been digging into some of this. What have you learned?
Well, Andrew, I mean, you're right. The U.S. economy bounced back in the second quarter, and that is the top line that the White House is touting. But economists say it might be masking other data points from this new report that could show cracks in the U.S. economy. The U.S. economy rebounding in the second quarter of the year, with GDP growing at a 3% annual rate, according to new federal data. The recent growth primarily driven by a decrease in imports after businesses overstocked goods during the first quarter to get ahead of President Trump's tariffs. Navy Federal Credit Union chief economist Heather Long.
Obviously, the story in 2025 is all about trade. A lot of that boost to get to 3% GDP is because we just didn't import very much at all.
The White House cheering on the announcement on Wednesday.
It's really one of the best GDP announcements or releases that you could imagine, because there's blockbuster growth, way above expectation.
But economists like Long say a broader view of the entire year offers a more accurate portrayal of where things stand. The U.S. economy shrank by 0.5% in the first quarter of the year. Combined with second quarter growth, it's growing at a rate of just over 1% during the first half of 2025.
That's not a recession. It's good, but it's not great growth. And we need to see a pickup to really revive this economy.
Beyond the overall headline number, the report showed consumer spending grew by 1.4% in the second quarter. That's up from earlier this year, but down from the final 2 quarters of last year, when consumer spending grew at a rate of more than 3%. The data also showed inflation cooling. Andrew, that cooling inflation came in at 2.1% and is from the Fed's preferred gauge for price tracking. It's also a figure that's closer to the bank's 2% target for inflation. But on Wednesday, earlier today, the Fed announced that if going forward for now, they're going to keep interest rates where they are. Andrew?
Yeah, and Katie, you mentioned those tariffs, big deadline coming up this Friday. How could those potentially impact the future of the economy?
Well, that's the million-dollar question right now. I mean, initially, economists warned that President Trump's tariffs would eventually cause a major economic slowdown, and that didn't quite happen as much, partly due to many of those tariffs being delayed or relaxed. But as you just mentioned, new ones are set to go into effect on Friday for many countries, and we'll see the result of those tariffs, especially in the third and fourth quarter of this year. Andrew?
All right, Kathy Tubman for us in New York. Kathy, thank you.